Welcome to Trading Lounge and the indices, and let's have a look at the good, bad and ugly with all of this bear movement here. So I've been looking at it as 1 and 2 and 3, 1 and 2 and 3 and 4 and 5 for the third wave here, and pulling back for the fourth wave. The fourth wave can pull back to the wave 4 of 1 lesser degree. Wave 4 can be simple or it can be complex. Wave 2 here was quite complex, so wave 4 here, the guideline of alternation, as they call it, can be simple. So we do have an ABC pattern down here, so it is possible to consider that the low there. Now obviously picking tops and bottoms is a bit of a mug's game, so we need to be careful. We need to gather evidence before we make a move, but you know, when you've got situations like this, the analyst in you can start, getting emotional and having a look at all sorts of different scenarios. So we need to be balanced. We need to put trading hat on as well, and also look for long trades. Now, I wouldn't be that keen on looking for short trades in this because I don't like shorting into big numbers like this because it's only going to bounce. So realistically, even though it's a sea of red, and it's also good not to have, I believe, just personal opinion, not to have green bars and red bars for all the newbies out there, because when you see big red bars, it makes you very emotional. It takes your point of focus away from things that you should be looking at, which would be, whatever your analysis is, the price and the volume and other sorts of things. So, having colours in there to make you more emotional is not such a good thing. So where was I? Yeah, putting your trading hat on. So really you'd think that, if the market went up from here, you think, oh shite, I should have bought the dip from that point. So we need to have a look at, what point we can buy into this. If the market's going to move up, we'll need patterns and supports and things that we use to, trade setups to enter the market on the long side. Now, it doesn't matter if the trade setup doesn't come or you get it a little bit wrong or this or that. It doesn't really matter. But the point is that in the bigger picture here, yes, it is bearish, but it could also be buying the dip as well. So you need to be open-minded. You need to be flexible. You need to look for evidence, and you need to be really balanced in what we're doing in these points here. So there's really a lot to talk about with all of this. Now, the other point with all of this is that I won't go into that one. Let's just start to go in and have a look to see if that wave 4 is possible here. Now, we called the low in here, and the idea was just to observe it, the move up, and to see if we could recognize anything or use anything in all of this. So going to the daily chart here, we've been here. We could count 5 waves down here and we go, okay, well, that's a possible low here. Let's just give this a little bit of time here to see if we can recognize an Elliott Wave pattern in that, and also the volume as well. Now, we understood that the volume in the moves up here has been less than the moves down, so the volume is suggesting correction. So the Elliott Wave pattern within these 3 bars here can be counted as corrective or beginning of impulsive wave. So the pattern itself is not much value at this point. You can bend those structures to suit your needs, so we don't want to get lost in our own opinions. That's not the right place to be. So when I don't understand the pattern, then I revert back to price. And when I'm talking about price, we develop the trading levels for that. And we understand that 5,000 is a major level, and 5 is the second strongest number. And 1 is the strongest, then 5, then 8, and then 3. Now, in this number 3 here, the 300 here, it's part of minor group 1, 2, and 3. So the idea was that if we could get a tested support on that particular level there, then we could go long from that point. And this is the pattern that we would be looking at here. This is classic trading levels pattern 1, and the pattern 2 is this one here, and there is a third one, but we don't need to worry about that at the moment. But basically we're waiting for the first high above the level here. Now it may break back down below the level here. This is the most common pattern, and then this will be our entry over here. So at this stage the market is still reacting. For if we just consider this the 5,300 across here, the market's moved up here and it's reacted from here. It hasn't pushed up here yet, and it's certainly not over here at this point. So we don't really have a safe setup at this point. I was thinking that if the market was going to be bullish, then we would see that about Friday morning session coming in with some strength. If Friday is not strong and Friday is negative, then we're in a bearish mode from that. And you know, I mean, you might say, well, Pete, it's pretty obvious that the market's trending down. A 9-year-old would know that. Yeah, I get that, but I have to move step by step. And in this case here, we've got this move down here, which I think is kind of interesting. It's actually in 3 waves. Now, I know on the S&P 100, you can count that down as 5 waves. On the NASDAQ, we can count that down as 5 waves, but on the S&P here, it counts down as 3 waves pretty clearly. So it's telling me in the bigger picture that this is probably a corrective pattern, which would make the rest of this here, whatever happens, a corrective pattern. And if we were going to look at the bigger picture, then in terms of, so on the long side here, we don't have support on top of the 3. If we get that, we go long. Simple. Okay. Otherwise, I don't want to short it into a large number here, even though it can, you know, do that. And if we were going to do that, now wave 4, there's a dozen different types of corrections, and they can all occur in wave 4. So we could have this down as an ABC pattern here, in 3 waves, and we could still put this wave A here and then put a wave B over here and put a wave C over here. Now also in out of these patterns, you could also have 5 waves down here, so we could go like this here. Now this leg here is a little bit longer than this leg here, so that's cool. So we could look at this as the 3rd wave here, a 4th wave here, and then a 5th wave to come down here. So we could get that here, and if that was the case, then we would get a B wave here, and then we would get a C wave here in 5 waves. Now normally wave A here and wave C would have some sort of equality to them, so we could look at it like this here. So that's a possibility. We also need to be a little bit mindful too, and I don't particularly want to confuse people too much, but it could be possible that we also end up with a corrective pattern in this particular space here, and we end up with it coming down here much further, making it look like it's sort of, you know, going to go down further and then push up here. So we end up with a sort of a corrective pattern in here for maybe a WXY or an ABC, and we come up higher here to meet supply zones up here as a B wave, and then come down at that point. Now this A wave here, this A wave here and a B wave up here, this is sort of where the banks are in a way. So if we look at Morgan's here for a moment, you can clearly see that we've got this ABC pattern here, right? It doesn't mean that you know, it is an ABC at that point. This could be a wave 4 here and come down for the wave 5 here. Then we end up with 5 waves down. If we get 5 waves down, we'll get a B wave and then a C wave, and then we're over here for this, you know. Now this particular market came, you know, from the lows around the S&P and the NASDAQ at the, you know, the end of 22, where other banks that haven't been managed as well as, say, Bank of America here, that came a year later from this particular pattern, you know. So in this case, we've got 5 waves up here. We can look at this here as an A wave here. We'll look for a B wave here and a C wave over here to pull back here. So in this case, you know, I'm just using these as examples. We've still got more to go here in the banking system with these, you know. So it is sort of interesting. We can see that the trend here, you know, even if you don't know Elliott that well, if you know it a little bit, you can see a couple of things here. You can see that this is 1 and 2 and 1 and 2 here, the beginning of the trend. There's always a beginning, a middle, and an end of a trend in any degree of structure, and these are the building blocks here. And then the middle of the trend is where the power is, and then you get the end of of the trend where it gets all messy and complicated, and it's, you make your money, in the trend and you give it back in the correction. So that's something that you need to work with. So in this case here, we don't know how big an ugly wave 4 is really going to get at this point. But what I am saying is it doesn't appear that the trend to the upside's actually finished yet. So I've just labelled this in here. This will be the same as the S&P and the NASDAQ with a 1 and 2 in this particular instance here. So you'll probably see the FXJ, the finance sector, is it the XFJ? I think in Australia anyway, the finance sector doing much the same as all of that. So so we're back to this little area here on this, and let's just go to the intraday now, and we'll just have a closer look at this here. So as I've been mentioning, sorry to keep going over things, but it's kind of important until something changes. It's quite clear that this is 3 waves down here. So I like it as an A wave here, and then a B wave here, and a C wave here for this. But this move up here, it's not really presenting as a nice impulse wave. I can get an impulse wave out of it in a couple of different ways, and we can have a look at those. But we've been looking at an A and a B and a C wave down here for this wave 4 here. So, we've been, we called the low in, and we just decided, let's just wait and see what we get. And here we're looking for support on top of 3 for the safe trade here and all those sort of things, and we're not getting it. So the other side to this would be looking at this as wave 1 down to here. And let's just say I've made a mistake in here somewhere, but wave 1 ABC for 2 here, then wave 3, and then wave 4 here. Now the wave 4 normally pulls back up 40%, but this is a 50%, not a big deal, okay? And then if that was the case, then we would, if this was going to come down here to give us that 5th wave here, then this would end up looking like this here, because this is 5 waves here, so we'll have 1 and 2 here, and we'll have 3, 4 and 5 here for this, and then we'll have our ABC pattern over here, and then we'll have another 5 waves down. So do we end up getting support on the 300, on the 5,300, and then we can go up from that point? From this area here, or do we drop down here? This is something that we've been sort of waiting for, and as I mentioned, even when this rallies here, as I'll say, Friday morning, being positive or negative will probably help with the direction of the market, even if we can't work out the count as such, you know what I mean? So so that's really where it is in a nutshell. They're the 2 counts. That's the the positive side being here, and the negative side is having 5 waves down here, and there's 5 little waves in this little move here already. But it looks like a little B wave here, so we could have this here as 1, 2, 3, 4, 5 here as wave 1 with an A and a B and a C wave here, and we could go straight up from here. Now if we're going to go straight up from here, then we want to be able to get a little classic trading levels pattern in there. So let's just go in and have a look at that and put our sort of trading hat on a little bit. So if we, and I know wave 4's overlap wave 1, I understand, and I also understand we can count this up as corrective, and there's probably a few different ways to do all of that. The main point here is that this is 5 waves here. So we've got 1 and 2 here, and 3, 4, 5 here. I'm not quite sure if it's finished. I've got one more little move, but so if it's going to be bearish, we're going to get a little ABC pattern here, and then we're going to come down at that point, right? So that if it moves up here, it's going to leave the low here exposed, and that would be the short trade at that point. Okay, it'd be a bit of a bumpy road coming down here, but the 3rd wave should sort of extend down quite nicely. Now, if it was going to go to the upside from here, then as an A and a B and a C here, there's some stocks that Nvidia and Google can come down. Meta has got a good case for moving up, so it's a bit of a mixed bag, but the weight is to the upside on stock. Have a look at today's video on that. So you can see here, that it's arrived here and reacted from here. In this case, we got the first little high above the level here. Not much of a high, but we could, if it had dropped back down here and moved up, that's something you could have gone long on. But so the arrival, the reaction, the first high above the level, the little ABC pattern here, that's your reference point. You can go long on. You can always drop it down to the second one here. If the market proves to you that it is strong and moves up at that point, that's the trigger at that point. So we're very close to getting, we waited all week for this. There's nothing we could really do about anything. So we're just really waiting, and we'll see what comes out of the, out of the gate at this point. So if we do come down here, it's likely to be the A wave at this point. So I hope you got your head around that a little bit. I know it's a little bit complicated. I'll try to keep it simple and not give too many counts, but give a fair and balanced view of both sides of the market. And, we just got to wait for something that we can recognize and get our teeth into at some point. Okay, so it's much the same with the NASDAQ as well, so I won't bore you to death with it, but basically the wave 4 here and going up for wave 5 is that wave 4 here. It's come down to the wave 4 1 lesser degree, so that's kind of nice. It's in the right place and all the rest of it. Could it come down further? Yeah, absolutely. I'll just have a look at the 38.2% retracement level from here as well. Okay, we're not that far off. It's pretty much there, but yeah, I mean, like, it could come down a bit further, and one of the other things too that sort of mentioned is that can we put wave 5 top in here? Yeah, I can make that fit here, so that is a top here, like we can do on Bank of America, but it does leave like Morgan's and other markets that we need to see further upside as well. So look, wave 4s are always a bit of a nightmare. They're always a bit complicated, and so on. So just keep your head about you. Don't do anything stupid. And here we go over here. So once again, in this case here, we do have nice 1 2 3 4 5 down here, so we can treat it as wave A and B here. Now as a C wave here, this is really sharp, a bit too sharp for my liking, because normally when you get the A wave is sharp, that wipes out all the stops and all the rest of it, all the early tight stops up here, easy money. And then the B wave and the C wave is more on an angle like this. When you get the C wave on an angle like this, it's more like the third wave and the fourth and the fifth wave to come down like that. So it's quite possible for this to turn into 5 waves. Now this looks like the longer part of the trend here, but this C wave here is just a tad longer than this one here, and this would also be, I haven't measured it, I don't think I have anyway, but even if it's fine where it is, it hasn't overlapped wave 1 here, as a wave 4 here. So, but once again, we have to work those bars there and work the situation, and just our job is to gather evidence, really, So the thing here is that, yes, we can look at all of this as 1 2 3 4 5 here for the A wave, the B wave and the C wave here. This C wave here is actually longer than this one here. In time this was longer, but in price this one is longer. So we can look at it as also 1 2 3 4 and down for 5 here. We could do that. We could look to it as being bullish as well. You could go long in this case, just to keep it really simple, above the top here. That would suffice. We also have 5 waves coming down here, so we could also have those 5 waves playing out. So anyway, taking out the top would be the long trade. Otherwise, it will be coming down further here, and I would imagine we stay within group 2. So when we talk of large numbers like 20,000 here, well, every single number has a group 1 1 2 and 3 above it, and it also has a group 2 below it as well, and that's the swing range, the initial swing range at least, of corrective patterns that occur. So this 16,500 would be the lower end of support at this point. So long above the top, otherwise we get 5 waves down here. If you do shorter down here, those 5 waves can be the end of it, pretty quickly. So just be a little bit mindful of that. The Russell, the ETF here, we could also call the low in here. I can look at this here as 5 waves up here. I can go 1 2, then 1 2 3 4 5 for third wave, fourth wave and fifth wave here. Yeah, I don't know. This could play out the same thing too. We could end up with 5 waves down here further as well for this. I just don't know. It's not a good looking picture. It's not strong at this point. We always expect to bounce off the low here, off a large number. Always expect to, if something's got a lot of zeros on it, expect a bounce or a reaction from those numbers. Very rarely do markets just sort of churn on through them unless they're in a parabolic move or in a series of third waves or something like that. So anyway, we need to do more work on this. There's nothing to see at this point. We come over to the European markets and the DAX here on the daily chart. So from this low here, right, this move up here has got a nice little 5 waves in it. This move here has got a nice little 5 waves in it. And we could, this doesn't really count very nicely here for 5 waves, I have to say. But either way, as 1, 2, 3, 4, 5 here for the third wave here, it does leave us with that third wave. Now, when we look at the stock 50, the stock 50, this top here, right, the stock 50 never took this out, so there's a chance that we could actually count this as an A wave here and a B wave here and a C, D and E here, or WXY. So what I mean by that is that this top here for the stock 50 here, this top here, this one never took it out, and it's very clear that it's in 3 waves here. So we'll just come back to this in a moment, but we could look at this here as an A wave and then a WXY over here for the B wave and look for 5 waves down here, or we could look at it in a different way, but still there's more room for it to come down over here. So once again here, I've kept this very simple just for, I like to keep things simple for myself as well, but this here, if we had, because that's the highest point, that's the lowest point, that's the highest point. So this here could play out as wave 1 here, some sort of ABC for wave 2, down for 3, back for 4, and down for 5 here. So it can have a move lower in this case, and I think that's sort of good to acknowledge at this point. So we could, in very sort of simple terms, we could view this here as 1 and 2 here. Now, I know that you could fault this 1 and 2. The third wave is pretty simple. It's pretty hard to sort of fault that, and putting a 4th wave here for this, and then a 5th wave coming down lower in this case, not that much lower, but taking out this low, because wave 1 was quite short. So if the extension's in wave 3 here, for example, then wave 1 and wave 5 could be roughly the same size. So something like this here for this. So maybe one more little sort of shakeout before this finds its feet, so to speak. And if we go to, I just want to check, see what I got on the 5. I did something on here a while ago, and that's pretty useless. This one here, then this one's here. So yeah, so this here, this is what I was looking at. So I can look at this here as an A wave from the top here, as an A wave here, and a B wave all the way over here. And then I can look at this as a C wave down here and have a low in place here. That's counting 5 waves down here and having a low. So that can be the low there. What I was also suggesting is that on the daily chart, we could look at this here as 1 here, an A and a B and a C wave over here for wave 2 over here. And then all of this is wave 3 here and back for wave 4 here. It's not that we have really broken any sort of rules at this point. The 38.2% is here, so we're pretty close to that as well in that case. The move up here, yeah, I could count it as an A and a B and a C wave up here. We could count this is not quite 5 waves down here just yet. Let me just check on that. It could be an A and a B and then 1, 2, 3, 4, 5 here. So realistically here, I'm just shooting the breeze, we could go up from that point. However, if this is 1 and 2 here, and then this is 1, 2, 3, 4, 5, that's the third wave. So if we get a 4th wave here, that would come back to this consolidation area here roughly, and then give us this one here, then we would have 5 waves down. And if we have 5 waves down, it'll give us an ABC, and then it'll go down again at that point. So once it basically breaches this low here, then we would need to look at this. That would, if this low was breached, this one here, then it would confirm that this is an A wave, a B wave, and a C wave here. Okay, so otherwise we could look at this as 1 and 2 and 1 and 2 right to this point and then move up from that point. So once again, like the S&P, and this will just follow the S&P at the end of the day anyway, most of the time. When they're in tune, they'll follow, it will follow, and if it's not, well then it could be 2 weeks out of account compared to the S&P. So it just depends on what's going on outside of these markets. So 3, 4 and 5, either that. So you could also look to go long above that top there. So it's sort of that simple. If you're going to short it, you short it over here, but I'd be very careful about shorting it. I wouldn't expect too much out of it. Do you know what I mean? Yeah, I said we'll have come back to this one over here now that you understand that a bit. So this top of this wave 3 here, this never moved up. This never gave us a top up here, so it gives us a different picture here. So I could look at it. Look, to be honest, you can count this in a few different ways. I've got it as an A wave here, a WXY for the B wave here. I could exit over here, and I could, put a W over here as well. So there's a couple of ways to count this. But what I was sort of just thinking about is this last leg here, because if it was an X wave over here, then I only need an A and a B wave and a C wave down here for my Y wave, an ABC, right? But I still need another move down here. If it was wave B over here, then it would be 1 and 2 and 1 and 2 and 3 and 4 and 5 here for wave 3, and then 4 and then 5. So what I'm pointing out here is that this could have 2 more lows in here, so we need to be a little bit careful. It's not that they're going to come down that far. It's just that they'll be in this, around this 4,500 here, and a little bit lower in this case, but it'll just take a little bit to finish off. Do you know what I mean? So just be careful about this. But the good news about this, when you think about it, is that this is a bullish corrective pattern here. This is not an impulse wave down here. So the good news is that we're in a correction. It's just big and ugly, and we just need to relax and work through the issues. So that's the DAX, and we come over to the FTSE, and the FTSE's in a correction as well here, and it's been a bit rough, but in a way we know that bullish corrections are in 3 waves, and we can see that we've got 3 points of contact here for this, so we do have a corrective pattern here. The question is like, are we finished with this, or do we need another low here? Is there going to be another low here? Can I count this in different ways? We can put this over to here. We could probably put this over to here. There's different ways to look at all of this as well. I don't think, look, if it can be worked out for sure, and you can, because a lot of folks like put a count there, and then they think that's it, where I can see, if I can see another count, well then my count becomes a bit useless, so then I've got to kind of go and look at other things to strengthen my case, or to strengthen my next step. You may not be able to see the light at the end of the forest, but what you can see is your foot in front of you, so you can take one step forward, and that's kind of what I like to do when I don't know what's going on. So I can see that we're in a corrective pattern. I can see it's big and ugly. I can see that we've had this move down here, and then I've got to kind of figure out, can we, like the other markets, can we have another move to the downside? Did I have something on this one here maybe? Oh, this is just another way to count, but I need to lift this up 1 degree of structure here. So yeah, it's the same here as well, but I just want to go to, I can look at this as an ABC pattern here. It's a bit big for a 4th wave, I have to say. Do you know what I mean? So it's come up a little bit higher, Then we got the stochastics coming in nice and strong there, but I think I'll just go, I think I'm on the 1000 and I'll updating. I'll just check here. Now this is a little bit messy and stuff in here, but yeah, so, you know, I've WXYZ this until the cows come home. So, I mean, you can just see it in different ways. So my main focus is just being over here and trying to understand if the move up, if we got a, you know, because I can count 5 waves down here. Not the best third wave, but it is longer than the first wave and everything's pretty cool and that's okay. And so I can have a low in here, but if I've got a, because of all these WXYs in here, that means that if I had a B wave here, then this could be the C wave here, right? If I had the W here, then that's a bit of a hassle. Then this could just be the A wave here, a B wave pulling back to the 50-60% here, and then the C wave down here for this. So that means that I'll be coming, you know, this is down for 1, 2, 3, 4, 5, something like this, and then up like at that point. So I could look at this here as an A and a B and a C wave here, and that's the top when we come down. Or now we're at this point here, and we can look at this as, you know, as the move up here, as and, you know, 2 equal moves. So we look at it as 1 and 2 here. So we could look at it as 1 and 2 here. And yeah, and this, put this as wave 1 here, and then look for a wave 2 here. Now the wave 2 here, if this is 5 waves down like the rest of the markets, then it could just play out like this here and then do this and then go up at that point. So at this stage here, what we've got is we've got this top here. So you could go long above that, but you don't want to really go long here. You want to do it on the, you want a classic trading levels pattern on the because we're entering, this is all of group 1, so we want to be here and the arrival, the reaction, the first high above the level, and some sort of ABC pattern here, and then up at that point. That's where you want to go long, and then you, with the view of actually trying to look to build in over here as well, if that gets triggered to the upside. So I'd go here and I'd go here on this, and otherwise this here you need to be a little bit careful. So on the bearish side here, this is where you need to sort of, if this is 5 waves down here where it looks like that's the case, then the market can just retrace, you know, back up to the 50-60% here somewhere, and then drop from there. So we could get little 5 waves up here, so 1, 2, 3, 4, 5 up here, then a correction here as an ABC pattern here, and then another 5 here, and then come down at that point. But I'm kind of expecting to come down. If this is 5 waves here, this would be the A wave, the B wave, and the C wave here for this. So you just want to not get stuck into the, don't get trapped into that situation. So if the market just went straight up, then you can look to go long. If this goes up to here, this box, and then drops here, then you can use that high here. You would also look to, if you're going to go long, then you look for a classic trading levels pattern on the 100. So the same sorts of patterns up here, you'd look for the smaller version there. But otherwise, if it was going to be bearish, this is going to be down for 1, back for 2 over here. And then you're going to go down at that point. So you'll come down here anyway, and then you'll go back, and then you'll go down again at that point. So just be a little bit careful. Like I say, Friday morning, we'll just look at the video. We'll do the video tomorrow, and then we'll know where we are. We'll be able to get the setup, because it would have broken one way or the other tomorrow, tonight, in the next session, whatever, and then we'll pick it up from that point. So, you know, we've been doing this talking all week, in a nutshell, trying to get to a certain point. From wave 3 back. We've just got to be patient until we get there. Okay, wave 4, so pull back to the wave 4. Clean this up, and we'll have a look at the Australian market. In a nutshell, we're in that support range zone, and on the weekly chart here, we have seen. So the Aussie market here. So it's a bit the same. This is the daily chart here, and I've got wave 3 sitting here for this, so that's in line with the US markets at the moment. Now that could be true or not true, and we'll explore that in a moment. But otherwise, this move down here appears to be in 5 waves. Okay, so that means that I could look at this here as some sort of A wave, B wave, and C wave here, and go straight up from there. So that's possible, but I just don't want to go that way just yet, but just to let you know that that's the case. If I have a look at the XJO here, and this is a 5-minute chart, okay? So this is the cash market. So you can see here that it's a little bit dodgy, but we've basically got some sort of little move down from the high here. So we could look at this as 1 and 2 here, and the third wave, 4th and 5th here. So wave 1 and 2, and obviously we can't complain about the third wave here. That's pretty, convincing. And then if we got the third wave here, this will be the 4th and the 5th here. So in a way, we do have 5 waves down here. Now, if we got 5 waves down here, we should pull back up 50-60% up here and then go down again. Now, I don't know how far we're going to rally. As far as the crow flies, we could look at this as the A wave and ABC for the B wave here and up for the C wave here. So this could also be corrective here as well, Maybe I could extend it out here further and put wave 1 here and 2 into here, and then put wave 5 over to here and put this here and put this over to here, coming back up to this wave 4. Look at this as 1, 2, 3, 4, 5, and do it that way. Either way, it does look a little bit bearish, that's the thing. So we've got to kind of go with that a little bit. So we either sort of push back up into here somewhere as a B wave and then come down for the C wave here, or like the other markets, we push down to here and then we push up and then we come down. It's that kind of thing. So it's not really ready to go long at this point, but we'll just see what Friday does. Let me just have a look in here at 1,000 ticks here. Yeah, so yesterday we looked at this as this move down here as an A wave and a B wave and a C wave, having this low in place here, and that's all good. And the first day we looked at this here, we counted it as 5 waves, and yesterday we looked at it as 3 waves down, and today I'm looking at it as 5 waves down here again as well. So in this case, I could view it as wave 1 and 2 here, and then 1 and 2 here as well, and then this here would be an A wave, a B wave, and a C wave here. But if this low gets breached here, this one here, that low gets breached, this one here, then the whole move is corrective at that point. So we could just come straight down from here. The other point with this is that we could also have a little ABC here and push up and then still come down from this point, because the XJO and some of the banks have got this as 5 waves here. So I think that we're just going to be a little bit, we're stuck in a bit of a complicated situation at the moment. I mean, it would be nice. I can also just put the, copy this and put the B wave here as well. We could do that, and we can go down as 1 and 2 and 3, 4, 5 and finish down here for the C wave and then go up from that point. That's possible as well. So we're just not there yet for this, and I've got this as wave 3 over here, which is fine, but I kind of look at this. I won't spend too much time because the video is pretty long here, but I'll just go back to this picture here. Is kind of interesting, really, just sort of shooting the breeze a little bit on it. So the market was going along nicely as 1 and 2 and 1 and 2, and we had sort of 1 and 2 here, and then we're moving up into the third wave here, and then COVID hit and crushed the market here. So the logical thing was to put wave 1 here and wave 2 here. That kind of makes sense, The only problem with that, though, is that there's a few overlapping wave structures with this one here to this one here for this. So I kind of I look at this situation here, but, when I get spikes in the market, so like on an intraday basis where, it could be a trader that's some hedge fund that's done something, or it could be somebody said something that's not true or something. It could be an intraday move. And if I got a spike like this, I don't particularly worry about it too much. I mean, I don't sort of include it in the count. Now, obviously, a lot of people get upset about that, but in a way, it's kind of good to look at both sides and take a balanced view, because in that case, I could go 1 and 2 here and go all the way up for wave 3 here. So let's just pretend that COVID never happened for a moment, and we were going along as 1 and 2, and we had 1 and 2 here, and then we're going up into the third wave here, and the COVID hit and it just dropped. So it never really finished off here. But if it didn't happen, then this 3 here would have been sort of over here somewhere. Then we would have had 4 here, and then we've got 5 up here for the third and the fourth here. So we could go into a larger fourth wave here, that's what I'm sort of saying. But in a way as well, when you look at this here, is that this move to the 8,000 here, it's really just arrived there, hasn't it? It's just in the process of reacting from there. If you consider this particular pattern that we work with here, we've just arrived here at this level. So we don't know how big and ugly this is going to get here, So anyway, I just thought that was sort of, just sharing myself thinking outside the box on that. And this would leave it like this here. So a wave 3 and 4 here. And then 1 here, 1, 2, 3, 4, 5, and then 1, 2 here, and then all of this is the third wave, the fourth wave, and the fifth wave here, moving up. So we're looking at this sort of ABC pattern here. We could take it on as the banks and look at it as 1 and 2 here. We could look at it as a wave 3 coming back for this sort of wave 4 here. I don't know yet. Just sort of looking at it. We'll see. We'll see what the US markets do. We'll see what our banks do. All of those sort of things. But in the meantime, with all of this, is that on the daily chart here for this, coming back to here, this is account that sort of fits in with the US and the US banks and also our banks as well. So I'm kind of just running with this at the moment, but it still doesn't really help us with this here, So let's just see what we get. We'll see what we get here. I want to see what the XJO does as well to see what happens at that point. So nothing really to do here today. Let's just see what the US do overnight, and then we can pick it up from that point. Okay, cheers.